It is just another Manic Monday. So, we're definitely experiencing a little bit of pain. But as they say, no pain, no gain. The boys on Discord are fighting it out as to whether management should have structured debt differently in order to avoid the debt wall that is leading people to believe that there is substantial risk tied to the stock. Personally, I think had there not been the perception of risk, it wouldn't have created the opportunity. But is it an opportunity, or will Rob Simone have ended up being correct? Most people at least agree it's not going to be a zero at this point. It is off the short list. But this pain is a challenge to endure. No doubt about it. So, Steward seems to be wanting to reject the master lease, which could mean that they get evicted from some of the hospitals that they're in. That would be interesting. Now, the bankruptcy court apparently can force them to vacate, or they can leave it up to state law. So it's sort of in the judge's hands. There's some back and forth as to if the judge has done a good job thus far. Steward's such a mess. Such a mess. But at the same time, I'm not overly fearful. I would be more nervous shorting right now than I would be buying shares at today's price. Short interest, I found out, is at a record high according to the boys on Discord. They checked the data. I believe it was 235 million shares sold short as of right now. So that's a pretty big deal, and kind of explains maybe why the price has kind of withered recently. More blocks of shares sold short rather than purchased. Seems like there's not a lot of buyers in the market today, which is pushing the share price down. And of course, earlier I was happy because PayPal was sort of pumping a little bit, and it's given a lot of that back. So that's kind of rough. It was like the one bright spot I had today was PayPal. And see, Grab sitting here doing nothing. Let's see what BTI is doing today. I know, Brett. Happy Monday. BTI. I mean, pretty flat today, but that's gonna be pretty much par for the course. They're not a very volatile stock, a beta of 0.27. So they're not going to generally have these big dramatic 10-15% moves in one day. It's going to be pretty uncommon for something like BTI. If they go up, it's going to be low and slow. Steady like the tortoise. Slow and steady wins the race. That's British American tobacco for you. Elsewise, another one that's kind of hurting a little bit today. Good old Intel. Good old Intel. Now, I already have gone through seeing this go from like 47 when I was first getting into it down to like 24 at one point. And then, I averaged down quite a lot during that time. And then going up to 50 and then down to, to 19 or 20. That has been a journey and a half. I think I've seen a lot of people capitulate recently on this and just sell. And it could be that maybe that's the right move. But at the same time, we're in a situation where, and I hesitate to call bottoms, but 0.76 price to book for a chip maker is seems pretty ridiculous. And importantly, okay, yes, their free cash flow is negative, their net income sucks right now, but price to operating cash flow is 7.63. I've been calling Amazon a steal left and right at a 17 price to operating cash flow, and probably still for Amazon that's a better deal because of the moat and the lack of risk, or at least what I perceive as the lack of risk. So here we go, right? Intel, though, price to operating cash flow of 7.5. When the CapEx on building up foundry sort of subsides, I think they will probably look somewhat attractive again financially. I was recently taking a look at the computers and laptops on sale at Sam's Club of all places, just out of curiosity. A lot of Intel stickers still, you know? Like, I really just don't think this is going anywhere, but it will suck if it turns out that they essentially burned tens of billions of dollars in CapEx every year for no good reason. That would definitely irk me a little bit. So, yeah, I definitely don't want to see that happen, but it could. It could. It's just, they do say they have 15 billion in committed business lined up for foundry and all this, but a lot of the work at some of the sites has been delayed. Ohio was pushed back, Germany was pushed back. Arizona, from what I understand, is on schedule, so at least that's something. They bogarted the ASML lithography machines for the near term, so because those machines are built very slowly over time, and delivery is going to be a year plus out generally from where you're ordering them. So the fact that they're bogarting those machines, and they're expensive too, by the way, makes me think that they have they think at least that they have a realistic chance of being able to put them to use and actually generate some kind of return. It would be crazy if all the CapEx Intel's putting in right now ended up turning into absolutely nothing, a nothing burger. That would be just absolute insanity. It could happen. It's not impossible, but I don't know. Seems like this could be the absolute ultimate in fear and pessimism with regards to Intel. And should they survive, which I think they are most likely going to survive, I don't think that they will actually go bankrupt or anything like that. Surely they will see better days than today's $20 a share. I hope. But then again, they say shit in one hand, hope in the other, see which one fills up first. Yeah, sure. So Paul, that's absolutely right. Cuts should be helpful for them, but and if you were in Discord, I have said this numerous times. I think I said it during the MPW roundtable on the Cash Flow Kings live show as well. A 50 basis point interest rate cut one time will not fix everything overnight. Higher rates, plus their debt wall, plus their lowered credit rating, plus the Steward bankruptcy, plus the short and distort campaign. These are the many cuts, the many factors that are operating against them, right? They're going to unwind slowly, probably. Or at least that this is my gut feeling, is that they will unwind slowly, and then maybe the share price will recover slowly for a time, and then all at once. I think at some point it'll be the shorts that are in right now, because short interest is at an all-time high. Okay. So Arya, my stop loss got triggered on Clove, so I don't have my 1,000 shares of that in my value portfolio anymore. I do have a little bit in my old Vanguard account I had forgotten about, but yeah, I mean, Clove has a lot of potential. It looks like they said they were going to start selling or licensing or something their Clover Assistant, where they expect the margins to be that of any traditional software business. So that'll be interesting. It could have some potential for sure. Yeah, that's correct. MPW continues to be shorted at the latest short report. Adds the potential explosion. So what I was saying before, I think we'll see as some of the negatives against MPW slowly start to unwind in reverse course. So interest rates, they're not going to suddenly go back to zero all at once. They may not get actually back to zero, but they will probably taper down a bit over time. That'll kind of ease that a little bit. Maybe as their liquidity improves and things, or they refinance some debt or do some secured stuff to push things out, perhaps their debt situation seems to improve. Maybe their credit rating gets a bump back up again from Moody's or S&P. Rob already and Hedgeye already took them off their public shortlist, so maybe that's the active short and distort campaign may be kind of coming to a close. So maybe, just maybe, the stock price at some point starts to gradually recover as people slowly realize these things. Then, at some point, perhaps on the opposite end, you get some general enthusiasm and then a short seller's panic. Because, as they're pointing out in the chat, the background music is a bit too loud. Okay. Is it better now? Obviously, people have different preferences on that. How about now? Do we like this level? I obviously don't want I don't want people to necessarily be driven crazy by the background music, but it is a typical thing in most of my non-live videos. So yeah, all right, appreciate that, Akshay. So with MPT, those things will slowly unwind, hopefully, and then all at once there could be a short panic that happens once they reach sort of their pain threshold for losses. Now, it could be that some people shorting it maybe have something like protective calls or something in place, in which case maybe they don't start to worry until those get close to expiration. That's a conservative way of playing it. I'm sure some are at least playing it conservatively, though. Now, my own personal situation is I just have mostly shares. I do have some call options that seem like they will never actually print because they're pretty far out of the money at this point in time. But I viewed those more as lottery tickets than anything else, so I'm not really banking on them or anything like that. Not really reliant on those by any means. And it looks like as we're talking about it here, I know maybe they're getting the good old fiscal philosophy bump here, but it seems like We were like 15 cents in the red, and now it's gotten back down to 10 cents in the red. So you're welcome, MPW shareholders. I'm doing my part, as they say. So yeah, it's gonna be a journey. It's not gonna be fast until it is. It's gonna be slow until it's not. I'm a pretty patient guy, so I've felt worse pain before. When it was at $3, I was certainly feeling a heck of a lot of pain. This is nothing compared to that. As far as the dividend goes, well, if they can right size the dividend to their FFO post Steward, I do think it will probably be higher than 8 cents at the end of things. And when rates go down, their credit rating improves, they can rebuild the dividend in the future. It's not, I mean, they cut the dividend back during the original financial crisis of 08-09. They slashed it pretty hard, and then they rebuilt it. I think this is different circumstances, but some of the steps that they're having to take to get through it are pretty much similar, you know. But I do want to talk a little bit about PayPal also. So I personally think Alex Chriss is doing a pretty great job so far as CEO. Maybe it hasn't taken off. You know, it's really funny. When the stock price was still beaten down into the 50s, you didn't see headlines this positive, right? People were saying Apple Pay is killing them, Cash App is killing them, yada, yada. Competition fears are exaggerated. Now that's what Seeking Alpha is saying. Funny how that goes. Where the data always supported the idea that the competition fears were exaggerated. They have their stablecoin thing, which there is some there. They can actually use their US dollar pegged stablecoin to reduce their own transaction costs. It's just funny. After a run up in stock price recently, now most of the headlines are so positive, whereas before it was just doom and gloom. Sort of like those Deutsche Bank price targets on MPW. As soon as the stock price went up above $3, suddenly their price target went back to 5 instead of 2 after it had dropped. So I actually think they could break 100 on the high side, and I think that now that the stock is seeming to want to stay in the 70s instead of dropping back down immediately, you'll probably see analysts start to say, oh yeah, this is now you'll probably see a high side of 120 at some point in the near future on this, because now all the articles are positive and the stock price is up recently, therefore the price targets need to be higher and higher. That's just the way the logic works. But Alex Chriss is a hell of a CEO. He kind of the PayPal will shock the world thing kind of had me worried a little bit because that wasn't all that well received, but in the time since then and the actual financial results, he's done quite well. So I'm happy. I think they're now being viewed again as actually a growth stock instead of a dead business, which, by the way, like, I'll say it again, this is not the pattern of a dead business in terms of their revenue. If they were actually a dead business or a dying business or a declining business, you would think this would not this would not be sustained, right? So, yeah. Now, they don't have a dividend, but take a look at that buyback yield. $5.45% in the last 12 months. So not only are they growing, but they buy back an insane amount of shares because they're cheap, or they have been cheap. They're not as cheap now as what they had been because people are starting to realize that this is actually a pretty good company. It's not worth $300 a share, mind you. It never should have traded at $300 a share. That was stupid. But, hey, we've got price to operating cash flow of 10, price to free cash flow of 11, and it's going to grow. So why not buy back shares while it's this cheap? So that every person that actually held the stock gets a bigger and bigger slice of that future cash flow. And of course, they do have a strong balance sheet. A lot of cash and short-term investments. A lot of shareholders' equity. Now their net cash is down maybe a bit, but they still on net could just pay off all their debt and still have hundreds of millions of dollars in the bank. So their risk with this company is pretty small. They're still growing. And their margins expanded a tiny bit. They got to 40% in the last earnings release. They up from about 39%. So a little bit of margin expansion, not much, but a little bit. But it's one of those things that's going to be slow. It's going to be a journey. Rome wasn't built in a day. Now, Alibaba is another one that just... I'm suffering just as much on this one as with MPW today. More now, actually, because we're down 3.74% on this and only a couple percent on MPW now, because MPW is getting that fiscal philosophy YouTube bump from me talking about it today. So maybe we can do the same for Alibaba, right? Not actually thinking I have any impact. It's just a joke, for the record. But this is one where, for some reason, their earnings was like, on as far as the numbers, kind of a disappointment, right? And yet the stock price jumped. Why? Because I guess cloud was looking optimistic. And again, the share price was up recently. A lot of the articles are, I would say, a little bit more positive now versus negative. Although, hey, maybe after today they'll go back to negative since the price came down. But this is another one where, okay, yeah, the analysts have it as a strong buy, of course. But it's cheap based on cash flow, not on net income at the moment. Like I say, 22 PE is, assuming they're all aligned and the net income and the free cash flow are closely aligned, 22x is pretty expensive. But 8.5 times their operating cash flow, which again, that's like half the valuation of Amazon by that same metric. Price to free cash flow, 11.25. And this is another one where they do have a dividend, but again, the buybacks are where the action really is. 3.89% over the trailing 12 months. Total shareholder yield of roughly 5%. So similar on PayPal to like the total yield. It's just some of theirs is dividend, some is buyback. And again, if they're trading at 8.5 times operating cash flow, that's a great way to reward shareholders. Most people, they're pessimistic about Baba because of, oh, well, it's a Chinese company and you don't really own it and everything like that. This is something, their ownership structure has been a known element for the entirety of the time that it's been listed. Okay. It's not a surprise or anything like that. People knew about the ownership structure just as much when it was $304 a share as what they know, how much they know now. Yet now, that's a reason to avoid it. Whereas when it was 300, maybe people were like, oh, well, it's still worth the risk in spite of it because it's the future and it's great and fast growing economy. It's the Amazon of China, all of that. It's kind of funny. Now, my personal take is that the late Charlie Munger, obviously, he owned the stock at one point. He wasn't worried about the ownership structure. And even when he turned kind of negative on the stock, it was more because he overpaid for it. Because he paid like 3 times the current share price for Alibaba. He paid like 200 or something, I think. It was more about the price that he paid and misunderstanding what the value was, more so than being worried about the ownership structure. And Michael Burry, I don't have any kind of insight into his thoughts, but he's been a strong buyer since I think he started buying. I think the records from the 13F show as of like last December, and he's been adding. So is that ownership structure just something that they just haven't heard about yet? They're deploying millions and millions of dollars into this stock, or do they just think that that is sort of a red herring and there's no there? Or do they just think for the time frame that they plan to own it, nothing bad will come of the ownership structure concern? Could be any of those things, or something I haven't thought of potentially. Now, this is one where I actually do think probably management has guided that they think that the actual price the stock should be trading for is somewhere around 120. So you've got the high of 130, average of 105. I think anywhere between this average and high probably kind of makes sense for Baba. Hence probably why the analysts have a strong buy rating. And I don't know if I feel worse about it because I agree with the analysts or better. I tend to find a lot of the analyst stuff a little bit ridiculous with a lot of companies, but I'm not a professional, so maybe I'm just too stupid to understand. Anybody got any requests before we hop? We're close to the 30-minute mark, and unless there's requests, I'll probably hop. I'll hit British American Tobacco a little bit before that, but then well, it's funny because yes, British American Tobacco is the other one here. So we're still at a 6 times price to free cash flow. The PE is non-existent mainly, to my understanding, because of some type of an impairment or something they took. They were expecting a menthol ban in the US, which has not happened and probably will not happen. At least not anytime too terribly soon. So there's been a reprieve on that. Cash flow remains very strong. And let me see. So they report semi-annually. This is a thing with foreign companies. The U.S. is the country that is the most obsessed with the quarterly stuff. Semi-annual or annual is more common in foreign countries. But the thing I want to definitely look at here is the free cash flow. So the free cash flow seems to always have one half in the year where it's really high and the other half where it's really low. So there are buybacks, or there have been buybacks, but small amounts. I have heard that they're going to step the gas on the buybacks. So, yeah. Buybacks are definitely a thing. The share count is down a little bit. But at 6 times cash flow, and this is actually... Okay, so the dividend, I've done the math myself. So this data feed won't show a payout ratio because payout ratios and data feeds are almost always based on net income. This is an important thing to understand. So it'll show a not applicable or like a negative or something because if net income per generally accepted accounting principles isn't there, then there is nothing to have a payout ratio on. But I've looked at it compared to free cash flow, made sure that it was the currencies matched and everything. And it was something like 60%, somewhere in that general ballpark of the free cash flow is going towards their 8% dividend yield. Their buyback yield is only at 1%, leading to a total shareholder yield of 9.11%. But they can and probably will slowly up that buyback yield. Also, since their dividend yield is 8%, buybacks are especially good use of their capital because they save the dividend, the 8%, on every share that they buy back, right? So if they buy back $1 million worth of shares, that's $80,000 worth of dividends that they don't have to pay out every year going forward on those shares, which would also leave them more room to maybe increase the dividend later down the road. So buybacks can compound a lot in a company like this. And again, they're only spending about 60% of their free cash flow to get the 8% dividend yield, meaning they've got 40% left to play with, roughly. So they could easily double or even triple those buybacks and really, really create a compelling shareholder yield at the current free cash flow multiple. Now, the only thing is the market, I think, at some point is going to recognize what an opportunity this is when they step on the gas there. So limited time opportunity, I would think. Now, personally, and other people have weighed in on this, I think it would be a baller move if they said, we're suspending the dividend and putting it all into buybacks. I actually think the share price would drop 10 to 20%, something like that, if they said that. And then the buybacks would create even more value for shareholders. Do it for like a year or two, then bring the dividend back. They could wipe out like 15% of the shares outstanding or something crazy like that. It would be awesome. AUPH. All right, I'll take a look. We'll spend... Oh, a pharmaceutical company, huh? Analysts have it as a strong buy. Okay. They call for the CEO and some board members to resign. That doesn't seem good. What is it that you like about this stock? Okay. Revenue is... Hmm. Uh, I mean, I guess they did just have net income for the first time in 5 years. A whole $722,000 of net income. Steward suing MPW. Yeah. Well, Steward's going to do anything they can to try to survive the Chapter 11. Huh. Interesting. Alright, so let's see. I mean, you said amazing cash reserve, 2.65 price to book, so let's see how good those cash reserves are. So the question I would have, okay, so yeah, net cash 244 million. Debt negligible compared to the cash. So do you think though that they're going to have positive net income going forward? And their free cash flow is almost breaking even as well. Yeah, I can see that. I don't. The thing is, like, I do not know what they do. So, let's see. Let me read the about section on them. Commercial stage biopharmaceutical company focuses on developing therapies to treat various diseases. Treatment of lupus nephritis. Okay. That sounds pretty niche. But if it's a necessary niche and they can do it profitably, then they don't need to be a $1 trillion company, right? They could go from being a $958 million company to being like a $3 billion company, and you would 3x, so not so bad. I don't know what the addressable need is for active lupus treatment. I don't know how many people that affects and what the average cost. I'm assuming that now, if I'm not mistaken, lupus isn't one of those that gets cured. It's chronic, right? So yeah, if lupus is chronic, then obviously, like, developing the go-to treatment, you theoretically have customers for life, as long as you get out to, you saturate with everybody that's got it, or the majority of the people who've got it, and you're the treatment of choice. Sort of like Humira had with their they were the go-to for I think it was it rheumatoid arthritis or something like that. So if this is that but for lupus, and they dominate that market for a decade or two, that could be good. Yeah, I know I know that lupus definitely affects certain ethnicities more so. It's like you basically never see a Caucasian, a white guy or whatever with lupus. It's like pretty much unheard of. But yeah, it certainly isn't as prevalent as diabetes or arthritis, but if it's a chronic condition that's underserved and they come out with the go-to treatment for it and can be profitable, like find their way to profitability years and years in advance of generics being able to compete, because they still have like a solid patent and everything. Yeah, I can definitely understand. I can understand the potential. I do not know much about lupus, but if this is a pharmaceutical company that basically is entirely laser focused on one niche area, and you can at least understand what the addressable market size is and the expected value per customer, like annually, like how much each customer will spend and what the margins are and stuff. Yeah, this even somebody that doesn't really go for pharmaceuticals, since it's such a very specific niche that they're targeting, you could probably, even if you're not an expert in pharmaceuticals, figure out if this is a good opportunity. But if they were bigger and they were more broad in scope, you would really have to like dive into pipelines and all that stuff. But if they've already got the treatment developed, they've got a good runway before their patents run out and generics come into play, and they have a pathway to actually be profitable, like really profitable during that time, then you may have a recipe for success. That's just the sense I get of it. And I think I get what you see. I don't know if it's one that I would take a chance on without more research, but the analysts definitely seem to like it. And I would assume that they've at least figured out some of those variables I was talking about. So, yeah, okay, I get you. It looks like they are projecting some profitability here because of forward PE of 24. So, okay. I definitely don't know if it's my cup of tea. Ooh, man. Ran up to $33 during COVID and crashed right back down to 6. But yeah, forward PE of 24, especially if their profitability is expected to expand. Not too crazy. So, yeah. If nobody else has any special recommendations, well, thank you for the super, sir. I appreciate that. Wasn't expecting to get any of those on today's fun little stream, so that's always a nice surprise. You should definitely consider hopping onto Discord, which is linked in the description if you like talking about these kind of niche opportunities. We have some people in like SSRM, or SSRM maybe. It's the mining company. We've got some people that are really that are following this one. Of course, I do MPW. I'm in Grab. We have some people in that. We have kind of a fun, eclectic little group of people on the Discord. I'd definitely be interested to see what some of them think about your pharmaceutical play there. There are some people on there that are, I would say, definitely better and more experienced investors than I am, and their takes might be interesting. So definitely encourage you to join that community. It's free, and I never plan to charge for it or anything like that. I just want to be able to have fun conversations about investing. So with that, I think we hit a pretty strong note there. So again, unless anybody has any other last minute suggestions, we're going to call it at around the 45-minute mark. Make sure also, if you're on right now, hit the like button to help this go out to more people after the recording ends. And also on X, aka Twitter. Nice call, Leaf. Yeah, SSRM was a nod to you, actually. Although weren't a couple of the other people. Okay. All right. since you are one of the OGs, Leaf, we'll take a look at Peloton. I've been more or less staying away from Peloton. By the way, this brand of energy drink I'm drinking is called Abe. So those of you that are involved in MPW will find that very amusing that I'm drinking an Abe energy drink. But yeah, honestly, my feeling of Peloton for the longest time is that it's been hot garbage. It was one of those ones that got a big pandemic bump and was never ever worth anywhere close to what it was trading for at that time. Like it's more egregious than almost any of the other ones. Meaning more egregious than PayPal 300, more egregious than Baba 300. So, yeah. Like, they got a big jump. They basically doubled their revenue in 2021. And I think people projected that to happen in perpetuity. And it didn't. And that's why it ran up so much and why it's collapsed since. Now, you were thinking it was like a monkeypox bump, huh? Or was that a joke? You said it on Discord. You said something related to monkeypox with regards to Peloton. Okay. Yeah, this is hot garbage, okay? Still extremely dilutive, right? Share count's going up. I mean, we do have a little bit of free cash flow, maybe for the first time ever. I mean, gross margins are 48%. It's not necessarily all that bad for an exercise equipment company. And maybe they're improved somewhat by the fact they sell the like subscriptions with the bikes or whatever. But I don't know, man. Like, I know it's also a premium product, and a lot of people just want to pay their $10 a month to use the treadmill at Planet Fitness rather than drop whatever ungodly price Peloton charges for the convenience of doing it at home. Maybe the subscriptions are, I don't know, are they sticky? Is that recurring revenue? Okay, it was a joke. So what was the real reason you thought Peloton was going to jump then? No, I don't think this, it's not a cigar butt, right? So BTI is a cigar butt, right? Because it's still trading for 6 times free cash flow. It's not really a growing business, but it's cheap, right? This, like, where's your one last puff going to come from? From the non-existent cash flow, from the non-existent balance sheet. You know what I mean? Are you saying Citadel bought Peloton, or... Because I know you were saying Citadel. I thought you said Citadel bought Clove, and that was something that you were looking at for it. But yeah. Yeah, I'm not seeing it with Peloton. But maybe, you know, I know you use a little bit of technical analysis, chart reading wizardry to aid you in your analysis. So maybe you thought it would bounce off a moving average or something. Yeah. I mean... Yeah. Maybe somebody sees Peloton as like an acquisition target, potentially. I don't know who would acquire. Maybe, I don't know. Would Amazon want to buy Peloton out for some reason? I don't know. I can't figure out what is making people want Peloton. If you can make money off of trading it then, you know, more power to you. But I cannot for the life of me figure this one out. Like, I just do not see a single thing that makes me say, yeah, I'd like some Peloton right now. I understand SSR mining, though. I get where you're coming from on that one. And, of course, you're one of the larger MPW shareholders on the Discord as well. So I get where you're coming from on that one, too. But Peloton, I don't see it. All right. Now, I really do need to call it. I've got a few things I need to handle this afternoon. So, without much ado, the like, the subscribe, do all that stuff on X, aka Twitter, whatever you want to call it. Linked in the description below at Mr. Macho Mog. I'm trying to get my first 500 on there. I mean, it's not much insight. I don't see anything that tells me that it's gonna pay off as like a value opportunity. It's probably just a trade, if anything, maybe based off technical indicators, if you know that stuff and are comfortable with it. Not my bag, though. All right, guys, take it easy and hope you have a wonderful afternoon.